Greetings. Welcome to Time Out Trade YouTube channel. It's your host, Ellie Daps. Today I have two stocks I want to talk about that I personally have on my radar to purchase shares. But before I go deeper, I just want to make you guys know I'm not a financial advisor, so whatever I say should not be considered financial advice. So I'm not going to waste you guys' time. Let me just dig right into this. So, looking at the chart, this is the Disney daily chart. Disney is clearly in a downtrend for the past 3-4 months, as you could see on the chart. Now, this is why I like Disney. It's going into an area where I consider Disney to be a perfect spot for an entry. As you could see, there's a gap that was created May 6th, no, sorry, May 6th last year. And ever since then, it went up to 123, cool off a little bit, came all the way down to 101, which was support briefly, shot up back to 115, and ever since it went to 115, it's now sitting at 96 in after hours. Now, the gap began at 91.73 and it closes at 96.25. The stock is already at 96.88. My ideal entry for this one is 91. If it gets down to 91, that's where I buy it. I put my stop loss right at 89, a $2 gap. So I put my stop loss somewhere like right here, 89. And my target would be anywhere when it break this downtrend. So I would say my target would be like 102, 103 from where it's from 91. If I get in at 91, I'm watching this one keenly to see if it's gonna break this downtrend line right here. You need to break this line. At least get to 101, 102. If not, you need to come test this where the gap was at 91, as you could see. 91, right there. 91.77, somewhere there, 91.76. Yeah, right there. Now, the next stock I'm going to talk about is Texas Roadhouse. This stock is a stock I like because of how the chart is structured and the company's balance sheet. This company is sitting on 342 million in free cash flow. And this company interest coverage is a whopping 152, meaning it could cover its financial obligation 152 times. That means their balance sheet is healthy. They have no debt. Should I go further? You guys could do that. But I already did my research, and I'm just showing you these ratios that are beautiful. The forward PE ratio is 26. So let's get back to the chart. Now, Texas Roadhouse made a strong support at 163.50 to round it off 163.50. That's where the support is at right now for Texas Roadhouse. As you can see, December 8, 9, and 10, it hit that level 3 times and went up, came back down to and hold it at 164, and then it touched back this level March 9th and today. So this is a key support for Texas Roadhouse, 163. If it breaks 163, the next level of support is right here, 156.50. So I'm watching these two levels for Texas Roadhouse. However, if I end up getting this play at 163, if it hits the 163 level, my target would be right here. And the reason for this target is there's a double top that was created last year, November and December. And because that's a double top, usually stocks tend to reverse on double tops unless there's heavy volume and heavy buying pressure to push it through this level. If not, it's going to consolidate before it choose a direction. So 175, 176, that will be my target to take profit and then see if it breaks that level. My previous video, I mentioned CPRX, and I say I'm buying shares of this. I got in at 22.53. Stop loss still remain at 21.60. I'm up $89. This one's still going very well. CPNG, I'm still in that play. As you can see right here, my stop loss is at 18.24. The stock closed at 19.20, but still going up in after hours at 18.84. So we'll see how that one plays out as well. But if you like content like this, please hit like, subscribe, tell a friend to tell a friend, hey, I'm giving away a free game here, man. You know what I'm saying? Peace.